Okay, we are back. For those of you trying to download the app, apparently last year's app is still floating around there. If you're in the Google store, maybe the Apple store seems to be clear. So make sure you have the one with the dark background. It's a gray, black background. That's the logo you're looking for. Apologies for that confusion. I think it might have gotten corrected already. So, we started with a terrific presentation this morning on technology and what the future might look like. I mentioned to Eric that I read The Second Machine Age. Fortunately, I read it after Rise of the Robots, which was so depressing. I don't know, has anybody read Rise of the Robots? Yeah, right? It's a downer. But read Second Machine Age, and it's much more inspiring and optimistic about what the future looks like. So he laughed. So moving on, we talked about global capital, but 3 years ago we started this tradition of really taking a closer look at particular regions or particular markets or particular countries to understand what's going on in those parts of the world. Very often we see through a certain lens being on this side of various oceans. And so it's really informative, exciting, interesting to find out what's going on in other countries and really learn from some of the innovations that are leapfrogging what goes on in the US markets. So I'm pleased that we're repeating our very popular, what started as a Latin America session, now this year is a Mexico session. We have many friends and alums and people that we've met over the years there in Mexico. And one of those people is my good friend Pepe LaRocque, who's a partner and the chair of the real estate group at Baker McKenzie globally. So he has a real understanding of what's going on around the world from a legal standpoint and from a deal standpoint. And we've invited a great group to have a conversation with him for us to learn more about Mexico.
All right, well, a very interesting panel today, and we'll get an opportunity to talk a bit about Mexico and the current investments. Of course, Mexico and our biggest trading partner, North America, and the role of investors in Mexico. We'll talk a little bit about the different sectors in industrial, in office, in residential, and how you build the data to be able to take the best advantage of the different investments. Of course, the times are interesting in Mexico. We have, we're close to elections. We have strong stability. We had at the beginning of the term of the current administration of Peña Nieto, substantial reforms in education, labor, finance, and I think the main one in energy that has really begun to help develop Mexico. So we'll talk about that and how investments have evolved, the current status of Mexico, and then towards the end we'll talk a little bit about how we see the future coming. Of course, we're very close to elections in about a month or so, presidential elections, and of course they're tight and with very interesting outcomes. We'll talk a little bit also about the relationship that we have with North America and what effects it's sort of had, or maybe not had so much, on Mexico over the past year or so with the new administration in the United States. So with that, I'll ask you just a bit to talk to us just briefly about what you do, what your company does in Mexico.
Okay. Want me to start?
Please, yes.
Okay, Mark Cover. I'm the CEO of the Southwest region of Hines, so that includes Mexico down to Panama and a few southwestern states. We've been there since, really actively since '94. Our business is largely today industrial and logistics with some office as well. And at this moment in time, people are a little bit short-armed about Mexico, I think, in the capital world. We think this is an interesting time to move into the country. We've certainly consolidated, so we are investing, but we have consolidated where we're working and tried to push toward more core activities and a little further south off of the border to be a little careful about our what I think of as our Nafta exposure.
Dave, please.
Well, David Hobbs from Casa. I'm the Chief Strategy Officer. We are a group that focuses primarily on affordable housing, all through the chain, the value chain, from the asset management through the developing phase, the construction phase, and also the commercializing phase. And we do have a strong focus on urban areas. We believe on offering options to clients that want to have a home closer to their job sources and to the transport location. So we work on a different way that maybe the last years on Mexico, where the strategy used to be to go and try to attain lower prices in the outskirts of the cities, and we're working on the other way around. So that's primarily.
Thank you. Lorenzo.
Good morning. I'm Lorenzo Veró. I'm the founder and CEO of Vesta. And in Vesta was founded 20 years ago, and we develop industrial parks and industrial buildings leased to multinationals in Mexico. We are present currently in 13 different states, 175 buildings, $1.7 billion of portfolio value. And we love light manufacturing and logistics. And we're very positive about Mexico and about the future, even in uncertain times.
Thank you. Thank you.
Hi, my name is Sergio Mireles. I am co-founder and owner of Datos. We are a commercial real estate data and technology firm. We're actually the first data firm that used cloud computing in Mexico in order to provide clients with up-to-date information and statistics in Mexico. And we currently service specifically the industrial real estate market, which is where we found it to be the most institutionalized from the get-go. But we currently also monitor office segments of the industry. And we're looking forward to growing onto other segments of the industry, including hotel and retail industry. So thanks for having me. Looking forward to the discussion.
Thank you very much. And I think, well, why don't we start out with you, Lorenzo. You are a public company, and which is interesting. You are, I guess, the only real estate public company focused on industrial, light industrial and logistics. Of course, considering that there are also real estate investment trusts, or FIBRAs, that we call in Mexico. So you're based in Mexico, but you are really throughout all of the country. So can you tell us, a little bit about the markets where you're in? And then I'd be interested if you could talk a bit about how the market really judges Vesta and the public companies, because you have a very strong hedge in the sense that many of your rents are in dollars, your shares are in pesos, but so you have this effect, and yet sometimes with fluctuations you are affected. So I'd be interested to hear a little bit about that and the markets that you focus on.
Sure, Pepe, thank you. Well, first of all, I have to go a little back on 20 years ago. I started this with a small group of local investors, maybe with 45,000 square meters, 4 buildings. So, but one of the things that I believe we did right was to have a one-page prospect in which we mentioned what we wanted to do, the markets that we wanted to operate, what we wanted to achieve. But on top of that, we said that corporate governance was going to be the driver of this company, and that we would take this company public as soon as we could. So with that prospect, we went out and raised with family, friends, and whoever was around trying to raise some money. And we were lucky enough early in the process to get some institutional investors, strong investors that believed that Mexico, it was the right time to invest, such as NetSpeaker, for example, who believed that Mexico in the year 2000 really became a democratic country by the first presidential change, and we'll talk about that later. And then throughout, we were able, later on in the early 2000s, we were able to attract pension funds such as CalPERS. And Vesta was their first investment in Mexico, pretty much parallel to Reacción or to Prologis today. Then we were able to attract other institutional investors, such as DG, the development bank from Germany, DECA, and Broadwich, the management team of NetSpeaker, after they merged with Samsel and Esind eventually. So with that, we were able to grow the company to a point. I mean, we all need capital. This is an capital-intensive business, and we developed this business model. And at that particular time, the REIT concept in Mexico was being built, and so we work on that. And then we go to a moment in which we decided that a C Corp was a better business model for us, basically because it would allow us to reinvest dividends. And we truly believe that Mexico needs to be developed, and that if we were to distribute 90% of the dividends, that would take us to be diluting our shareholders. So that was a little bit of the main principle that took us to that. So in year 2012, probably, you remember, it was a tough year. Facebook came into the market, Spain, Portugal, Italy, all that crisis along. And on top of that was the Mexican election and the US election. But what I would say that the market understood our business model, were very supportive, and that's where we took the company public. We did a couple of follow-ons after that, 2013 and 2015. And then we launched a project which we call it the Vesta Vision 2020 plan, in which basically we share with our investors the vision we had and the action we were going to take on that regard. And that is what helped us to build and grow in a faster way in different states. Targeted markets, such we believe we understood early enough, and that's where we met Heinz at the first time, doing an important transaction in Querétaro, pretty much parallel to the aerospace park that needed to be developed and that we were awarded. So I would say that we target the Bajío region with 4 or 5 states around there, and then in the northern part of Mexico, basically Tijuana, where you are based, and Juarez were the important markets in which we wanted to have a strong presence. So I would say that those markets were the markets that we have targeted. Such markets have been growing at a much faster speed than the country. It's important to go maybe industry by industry. And so that has helped us to get into strong positions in some of the projects which I believe could be unique. One is the Aerospace Park in Querétaro, which we were awarded after bidding against 22 developers, and today is one of the icons of the aerospace industry, having Bombardier and Safran as the anchor companies. And then also in Aguascalientes, after that we were able to be awarded with the Suppliers Park for Nissan. And if Nissan was an attractive market to be in and to participate in the Suppliers Park, I would say we didn't know that Daimler was going to do the JV afterward with Compass, and so that helped us to increase the size of the market. Coming to maybe the second part of your question, Pepe, I would say that the business model that we decided was to have a business model, and this is due to the fact of the kind of board members that we have, in which they said, Lorenzo, try to skip the step by step and try to go to the best practices. And the best practice, I don't know if the market is going to understand this at the beginning, but sooner or later it's going to pay. Try to build a business model that has no conflict of interest. And that's how the C Corp was designed, in which we have internal management completely aligned with the shareholders. We don't have any construction companies that you really don't know where the value is being created, or the development of the properties are done basically at the company level. So shareholders get the benefits from a very effective acquisition of the land to a very efficient construction process up to leasing activity. So I believe that that's a little bit how we plan. And of course, we do have some impact sometimes with the uncertainty of the markets, like everybody's facing today, especially in Mexico after the Trump presidency. By the way, we were a little concerned about the Trump presidency, especially what he had talked about before. And we have just had the best 6 quarters in the life of the company. So I would say that little by little, you might be building on, and hopefully market will recognize the business model, the companies that are our tenants, and the positioning that we are developing.
Thank you, Lorenzo. Mark, I'd like to go over to you. In your case, the approach is a little bit different in the sense that you're not in the public markets in Mexico, but you do have assets in different classes, including some in industrial logistics. But you are also in more innovative areas in office space. So could you talk a little bit about your sort of approach and what you see, because what you have is, I think, quite unique, especially in the office sector.
Yeah, so to kind of get to there, we did a lot of the manufacturing-based product that Lorenzo was describing, and we've kind of pulled away from that, as I mentioned at the outset, and we've moved more toward in-country Mexican logistics. We love the rise of the middle class and all of that. So as we started doing that, it put us in locations, particularly in Guadalajara and Mexico City, where you had a lot of activity around the industrial parks. They weren't out on the edge of town. These are logistics parks. And so I was mentioning before we started, we were actually working on an office building right now in Guadalajara, which I would have said 15 years ago, we'll never build an office building in Guadalajara. But what we've seen is the education in Guadalajara is excellent. A lot of the training, a lot of the R&D, a lot of the quality control that's going into the manufacturing that's up in the Bajío, a lot of the, I'll call it intellectual property aspects, some aerospace as well. We're seeing a lot of the young people in Mexico, in Guadalajara, doing this kind of work. And we own this park. It's right at the terminus of the train station, the primary train station for commuter rail in Guadalajara, and a few blocks away are 3 different schools. And the young people were coming down, getting off the train, walking right past the front of our park and going to school. And over a brief period of time, we began to see people like IBM and other household names literally sticking an interstitial space, floor in these plain Jane industrial buildings and filling them up with people doing all kinds of office work or R&D type work. And the space was frankly terrible. Imagine you're on the 2nd floor, there are no windows, it was bad. And we started looking at it and realizing there's just an office demand here if we can provide for these workers what they need. So we actually are in the middle right now of taking down what was a completely leased, the park's completely leased, and I've really never seen the economics on this work before, but we're actually taking down part of an industrial building that was fully leased when the lease came to the end, and we're building a 6-story, what we call value office building there. But it's heavily amenitized. It'll have a gym, it'll have the facilities in it for the young people who are between work and school. They're spending a ton of hours every day in this general locale. And sometimes some of them will, they'll come down, they'll work a while, they'll go to school for 4 hours, they'll come back and work again. So there's a lot of interplay like that. And so we do see an opportunity as Nafta, as the results of Nafta are slowly being felt more and more. It's not just manufacturing anymore, but there's a lot of intellectual capacity, and so we see a value office market that really hasn't existed previously, and so we're supplying into that. And of course, that's going to put pressure on, as a higher and better use on this particular industrial park.
Thank you very much, Mark. That is very true. Something that is happening, and I think you see that all throughout Mexico, that we think that part of the manufacturing that goes on is very basic assembly type work, and all the contrary, that has really been growing. In fact, you see a lot of R&D moving to Mexico, if not for other reasons, just sometimes the inability to source engineers in North America generally, and the ability to be able to establish them in Mexico. And Guadalajara has really always had that certification. It's kind of like our Mexico Silicon Valley, if you will. And so, but that's very interesting how you really thought about that market and are focusing on it, because strong needs there. David, so you're on the housing spectrum, primarily focused in Mexico City.
That's right.
And on affordable housing, though you do also the high end, but your main staple is affordable housing in urban areas, primarily in Mexico. And I think your motto is being no more than 15 minutes away from a mass transit transport point. So tell us a little bit about that market. How do you see that market? Because it's tough. Property values in Mexico City are high. The general policy of the government has also been to move people back into urban areas where you have already schools and transportation available. So if you could talk to us a little bit about that.
Of course. Well, the housing market in Mexico City has, the most important thing to say is that it has a big gap between the amount of demand and the offer. So usually each year 20,000 homes are not being offered. So if you accumulate maybe 10 years like this, we have around 250,000 homes that would be accepted by the market if they existed. So, and this problem of a big gap between the offer and demand comes from the fact that maybe in the last decade, 8 years ago, 9 years ago, the primary government focus was to build house on the outskirts of the city. And this was because the prices inside the city were too high. The government was trying to get houses from a range of $15,000 to the $25,000 a piece, and this wasn't possible to do inside the city. So the first developments went out on the outskirts, and although at first this was a great idea because people were buying them, in fact, when people noticed that they were taking 2 hours to go from their homes to their jobs, and again 2 hours to get back to their homes, because transportation in Mexico City is not as good as we would like it to be, then the quality of life began to go as low as it could get, and they abandoned the homes, and then we had our own housing crisis 8 years ago. So the response of the developers was to do exactly the other way around. Let's try to go inside the city, and that's why our motto is to not buy any piece of land that is more than 15 minutes away from a mass transportation point, or that is too far away from the job sources. And now the challenge is how to get the prices, the price tags, as low as you can get, because the main market is on maybe the range of $40,000 to a $60,000 price tag. So if you can produce this kind of housing, you'll have a very profound market with a lot of clients and families wanting to buy apartments. And in order to do this, usually challenges go from a very complex regulatory and public policy that is not very clear, and you have to be a very experimented and player on the market. So this makes the barriers for entrance of new players on the market kind of difficult, and those that are in have to develop skills to deal with the communities, to talk with the neighbors, and together with them try to get things going. So I would say that it's a very profound market with a lot of people wanting to buy homes, and the solutions to do that is to try to build buildings that won't stress the infrastructure, the existing infrastructure. So maybe a 5-story building, 6-story buildings, no more than, if you want to build 200 or 1,000 homes, that is possible as long as you build nucleus of 20 or 40 apartments in places. And usually the neighbors will try to stop you. However, they are very open to talk and to understand the process, Because when neighbors see that they're just a big building beginning to be constructed, they usually think that something is wrong, that the law is not being taken into account, or that the government is working in a conspirative way with the private sector. And when you open yourselves and start talking to the community, these problems will be erased, and it will be possible to construct. And in fact, that's how we've been able to take the 12% of the market nowadays of Mexico City, is by working together with the community and trying to do things different.
Okay, so clearly a very important part in being able to develop in the urban areas. Now, part of that also, in our first segment and the presentation we had initially, a lot had to do with data and the access to data. Traditionally, Mexico has been not very good on data, and it's difficult to get information. It's out there because there is a lot of information in Mexico, but not completely gathered, so that persons like yourselves can use that information to come up with a better product that's better located and that is more akin to what the demands of the market are. Tell us a little bit about Datos and how you have the ability to do that.
Well, it's been a huge challenge. The reason we started was precisely, I was CBRE for over 7 years, and the first thing that I noticed was that there was a lack of data. And in a sense, we're doing a lot of very interesting stuff. We are producing new technological advances, and I'm actually going to have to give out a shout out to my competition who's here, Robbie. There's another very young company who's trying to do the same thing that we are. We're working on technology. We're trying to make data as accessible as possible to everyone who wants to invest in Mexico, who wants to know what's going on in Mexico. But it's the data itself is very hard to gather, so it might be very human capital intensive. So in that sense, it can be very expensive. So it's a huge challenge that we are slowly overcoming. Also, earlier I mentioned that we'd started out working with the industrial sector of the business, again, because we perceive the industrial sector of the business as being very institutionalized, in the sense that you have the end users being foreign companies, usually American, European, Asian companies. In that sense then, or big Mexican firms with a lot of assets. So for industrial developers, it was much easier, and it's still much easier to obtain corporate guarantees, and also to obtain dollar-denominated leases, which is very important for investors. It attracts a lot more investors if you have those two components. And but if and also if you have U.S. money coming in, usually U.S. investors will be more inclined to buying data from third parties like ourselves, which is not and may not be the case with office development in multifamily residential, which is it has a huge upside potential, but that's part of the hardships that we're working with. So yes, currently we're working with a lot of data. We're gathering a lot of data, but I actually had a conversation about this with Steve. We're still doing it in a very manual way, and we're definitely trying to work with the concept of big data, which is really when we're going to truly offer information that is massive and that we can obtain quickly, and that it's much more transparent, and that can really work for the entire market. So we've done a lot of we've had a lot of progress in that sense, but we still have a lot of work to do.
So something interesting, thank you very much. Something interesting that was talked about in the previous panel, just generally, the issue of sustainability. Sustainability is a key issue, and it's not only just an issue of best practices, but there's also economic effects to it, potential savings, and the fact that many institutional investors are requiring that, that asset managers, developers, really focus on real estate that is sustainable. I'd like to take have a take maybe starting from you, Mark.
Yeah, we do think it's important. We're seeing Mexico City is interesting. It's about the 11th plus or minus 11th largest. I'm sorry, 21st largest city in the world, and you know it's important because it's the political capital, it's also the financial capital, the regulatory capital. All roads lead to Mexico City. And so a lot of great companies, global companies, have offices there, and I think it continues to grow. And what we see across our portfolio, we're in 24 countries, so what we see across our portfolio is people really want consistency. You know, if it's a Baker McKenzie or whatever, they want consistency of quality and experience as much as possible within a cultural context for their partners, wherever they may be in the world. And they want, you know, assets that work, that support what the people are doing in the space. And so we're finding increasingly that the kinds of amenities that we would offer, they're going to be styled differently as we go country to country, but the kinds of amenities that we offer, people want the same thing everywhere. You know, they want their lives enhanced, they want more convenience, they want things that are authentic, things that are convenient, accessible. And so we're seeing more and more effort going into all of our projects to sort of check those boxes as we go, wherever we're going in the world. We do have to be sensitive about cost. And so costs can vary, but in Mexico City, rents are actually pretty high. Development costs are pretty high. And so we find that we can provide that. And even as I mentioned in Guadalajara, we're doing as much as we can to provide a great environment beyond just a cubicle for somebody to sit in and work, but where they can go and relax, they can get some decent food services, they can exercise a little bit, maybe even go off into a lounge area and work on their homework a bit. So we're trying to provide that. We think, you know, in our conversations with the market, even though it's kind of new into the Mexican market, we're confident the demand is there.
Thank you. And by the way, the questions that you're sending through the app, I am getting. I just don't put accept because then it gets all it clogs it up or something. But I will weed them in as we have the conversation.
Okay. Sustainability in housing is absolutely it's very important, and it's very important because it can become the most important differentiator of the developer, in the sense that the first thing to take into account is the location. If you have a near, I'll repeat a little bit, but if you have a near job development and a near transport source development, then sustainability comes within your business model. You'll be able to provide people with the opportunity of not having to use their cars, to be able to walk. Walkability scores actually indicate that those developments that are produced within neighborhoods that can interact with local commerce, and that they can walk to their jobs or to their schools or to their primary activities of the day, then the quality of life increases. So this becomes a very important thing if you're thinking of buying an apartment. If you can buy it near the place you live, then your life will be very much more richer and comfortable than if you live far away. The second thing to think about is that the amenities of the developments that we do, one of the ways of thinking is maybe you can put some sports courts inside or a gym inside, and actually people prefer to live very near to a regular gym and to just walk a block to their gym instead of being inside their own development. So we have to find ways of avoiding this very big developments with high walls that prevent people to interacting with each other. And because this produces an unsustainable way of making cities, since if you're not able to get the resources of the development into the streets and to impulse that the local commerces and people be able to participate in the development, then you would just stop being able to continue producing, since you'll paralyze the whole city. And the third thing that has to be taken into account is that, in fact, in Mexico City, infrastructure is not as developed as we would like. There's not enough transport, there's not enough water supply, and there's not enough or not continuously electricity, gas, and water supply. So the solution is to include in the buildings viable technologies that are not very expensive, but that can give a solution to, for example, the water problem. Nowadays, we're working with some companies to develop a system in which very similar to hotels, in which the gray water can be just reutilized, and we are saving around 60 to 70% of the water usage in each point. And this is being perceived by the government as a very good idea, and we're trying to find changes in the law and accordingly to reduce the costs of getting the license and the permits to build, as long as you have this kind of technology. So we're expecting that in the last months of this year, we'll launch the first development with this water system.
So I have a couple of questions that come in from the audience. One is on the issue of occupancy and certificates of occupancy in Mexico City. I'll give you the two because the two are kind of directed to you, but I think potentially to others. Is it complex in securing the ability to have a certificate of occupancy? Because obviously your margins, your profit margins are thin, so you have to be extremely efficient. Do you encounter issues with that? And then a second one is that there's been a lot of new investments in multifamily market in Mexico City. And it's just a market that is beginning to be developed. Do you see more opportunities there?
Yes, yes to both questions. First, the occupancy rate. If you build inside the first two circles of the city, I'm talking about, for example, I won't talk of geography, but usually the transport network comes from two circles: Circuito Interior, which is like the inner circuit, and the big highway that goes around the city. So inside these two circles, whatever you build will be bought or will be rent, and usually prices have gone very high as long as it's inside this part of the city. Why? Because commuting times are very big. You can take at least 1.5 or maybe 2.5 hours of transport from your home to the job location. So when there's offer of new houses or new apartments within these areas, then there's a huge demand that goes behind it. If you go into the lower price ranges, then the final client will be the family that wants to live there. If you just get outside or higher than the $60,000 range, then your client will be an investor that wants to buy the apartment to rent it. So you won't go out of market. You just change your final client. And the occupancy rates are very high. I believe that you could easily talk about 90 to 95% occupancy rate. But it's not on a guaranteed certificate. It's just the nature of the market that will take that into account. And talking about the multifamilies developments, there is a natural resistance of the market to accept big developments in the sense of 30-story buildings and with huge commercial or malls beneath themselves. This type of development will be more difficult to produce on the following cycle, at least from a political point of view. But what is being very easily accepted, and there's not a lot of resistance from any stakeholder in the market, is once again, low-rise multifamily buildings. You can build 20 to 40 apartment nucleus and then add them up all the way into 200 or 1,000 apartment development, and the typical thing would be to develop by phases and just start with the small building, then you sell it, and that makes you a financial, more healthy model than building these high-rise buildings.
Okay, well, thank you. I'm going to switch into a little bit different topics, and of course, the relationship between the United States and Mexico, the Trump administration, the potential administration of López Obrador. But before diving into that part, Nafta. You know, Nafta has been an issue since the beginning of the election, and right now the issues are, of course, automotive is a strong part of the Nafta renegotiations. But also a couple of clauses, one dealing with the dispute resolution that Mexico wants to keep in, yet North America wants to take out, and then the sunset clause that within 5 years NAFTA would automatically disappear unless it's renewed by the parties. Both have to do with certainty or uncertainty. Your investors, as well as Mark, your investors come a lot from different parts of the world, and they all seek certainty. Also, some of the clients that you have, you pointed to Nissan and suppliers, have an impact, or changes in NAFTA may have an impact. So I'd like to hear what your take is. Is this something that we should be worrying about, or is this something that it's part of the new normal?
Okay, well, first of all, I had the opportunity 25 years ago to be part of COESE, who was the private sector involved in the negotiations in NAFTA. Negotiations were held by government, but the private sector played an important role. And at that particular time, really Mexico was one of the most closed economies. And many of the medium and small companies in Mexico were scared to death to open versus the largest economy in the world. Finally, what came out of that was an enormous transformation. Everybody speaks about the NAFTA as being an investment agreement or a commercial agreement, even a competitive agreement. But very few people understand that one of the most important things that happened in Mexico was the transformation of a completely new mindset generation that learned how to work according to global standards. And that's something that doesn't appear even in the balance of the country. We do have that. Another thing that we did not have in the past and we have today is that from 94 to today, there has been $500 billion invested in an industrial platform that we do have today. Many of that, of course, invested by foreign companies being in Mexico. So that industrial base, the competitiveness we have gained, plus the mindset of this new generation, is what drives whatever comes next. Now, on this regard, Mexico is also part of what is even much more important than the treaty itself, which is the North American industrial system. And this North American industrial system, composed of Canada, US, and Mexico, needs a lot each other. in order to be competitive versus other regions in the world. So if you think from that perspective, and if you understand about the WTO rules, of course, certainty and NAFTA, after 25 years, there was a need to modernize NAFTA. There were many elements, e-commerce and technology, privacy, many things that we have today. By the way, at its time, NAFTA was the most modern agreement in the world, and that helped other agreements to be built. So NAFTA needs to be modernized, which is basically what they are doing. Now, if that gets to an agreement according to some of the clauses that you are saying or not, just think about that the industrial system is much more important than the agreement itself. We can, of course, we would love to have a 2.0 NAFTA 2.0. That would be maybe the preference of many companies, not only in Mexico, in the US, Canada, and the world that invest in Mexico or in this region. The second best option is just to stay as we are. With NAFTA, I mean, we can keep working the way with what we have today. If you think but let's assume that they do not get to an agreement, because some of those clauses are unacceptable to Mexico. I don't think that the Mexican negotiators will accept the sunset clause, or will accept some of the latest rules of origin. Could be different. That's something they could reach to an agreement, I believe, if they want to, and if the will is there to do it. But if not, I would say that the average tariffs by not being in the NAFTA is 2.5%. Some of the days, just the impact in currency is more than that. So I would say that in general we should try to set a long-term vision, understand, and we're working. In Vesta, we have been working, and in July, which we will celebrate our 20th anniversary, we will share a little bit of our Vesta 2040 plan, which of course is much more based on what we saw this morning about the long-term trends, about how technology is impacting real estate, and what's the new role of Mexico towards the world, including Mexico. I had the opportunity to be 2 weeks ago in Germany, in Hanover, in the most important industrial fair, in which Mexico, by the way, just as here in MIT, was the guest country invited. And it's amazing all what is driving and all the things and elements that go towards this vision. So I would say that of course, everybody would love, this brings uncertainty in the short term of the markets, but the fundamentals and the opportunities going forward are there. Either if you take WTO rules, if you stay what they call in a zombie way, which is with what we have today, and hopefully if there is an agreement reached within the next 6 months, that would be even better for Mexico.
Okay, thank you. Let me expand a little, because I've gotten a multitude of questions that deal with the issue of the perception of violence, or violence generally, in Mexico, and how that impacts in investment, and how concerned are investors about that issue, and also the actual users and your people on the ground, your tenants. Perhaps you can give us some comments on that also, Mark.
And I'm happy to do that. And I want to vector out just a moment and sort of back up in a different way what Lorenzo talked about. When I look at NAFTA, if you look at the importance of NAFTA is exactly what Lorenzo said. It's a mindset. It's the ability to do business across borders with an economy that was closed. The difference between the WTO tariffs and the NAFTA tariffs is really small, and it doesn't matter that much at the margin. But the broader aspects of NAFTA are really important. I think also NAFTA had some unfortunate, as most things do, unintended consequences. And one of those things was when they set NAFTA up, it was focused on the border, which meant that a lot of people, for jobs, were dislocated away from their families, away from cities with more infrastructure that are further south in Mexico, better education, et cetera. And they were relocated to the border for jobs. And so the border towns became a problem. And they are a problem. I mean, the border towns are violent, relatively speaking. The educational and infrastructure elements of a lot of those cities are not very good. And So one of the benefits in more recent years is getting away from the maquiladora approach and pushing with Nafta these opportunities deeper into the country where people don't have to relocate to get a good job. That ties into immigration. I think one of the negatives of the maquiladora effort, though well-intended, was all these dislocated people were now sitting next to the border. It wasn't very good, it wasn't very safe, the education wasn't great, hop across the border. So that's exacerbated, that issue. So I think a healthy Nafta it provides jobs in Mexico for a lot of people that benefit all of North America. It benefits Mexico, it benefits North America as well. And as people have economic opportunity in Mexico, their need to run somewhere else and try to immigrate in an illegal fashion is diminished somewhat. So I think there's a lot of hope and a lot of opportunity around the importance of some of these things. As far as the risk, the personal risk in Mexico from security, I hear about it all the time. People ask me personally, "Are you afraid to go to Mexico?" No, I'm not. I go down there a lot, but I don't try to make myself into a target. So I don't wear a Rolex. I don't wear the most expensive looking suit. I don't ride around in a fancy car. I try not to make a target of myself. I think it's the same sort of stuff you would do in any country in the world, in major cities. Just be somewhat smart. But do I feel uncomfortable, say, in the heart of Mexico City, staying in a hotel, going out for a short stroll at night, or having my wife come with me, which she does quite often because she loves Mexico, to Mexico, and we go out in the evening to dinner or this or that, and walk on the street, 3 or 4 or 5 blocks. We're completely comfortable doing that. That being said, but our employees, a lot of our employees, we have about 180 total employees in Mexico scattered across the country. It's unfortunate. A lot of our employees have had, some form of petty crime that's happened to them. Often, it's something where they're sitting in a light, somebody walks up with an old rusty gun that may or may not work, taps on the window and demands their wallet or demands their watch or something like that. That sort of stuff, unfortunately, is there. And we'd like to see less of it. It always troubles me when I get those reports of things like that going on with our employees. So I'm extrapolating here. I don't know other people's employees, but I assume it's some of the same kinds of issues. So there are issues in Mexico like that. But what I love about Mexico is the people are extremely hardworking. They are a proud people. They're proud of their country. I love the age in Mexico. They're a lot younger than the U.S., and so I think that's dynamic. I think it's great for the residential business. And frankly, that's why we love the distribution business. The people have more money than they used to, and they're young. And so we love the distribution business. So I've probably kind of wandered afield there, but I just think there's a broader picture about the relative importance of NAFTA and good relations between Mexico. And I agree, I think the NAFTA for 25 years did a lot of things well. I think it does need to be adjusted to fix some unintended consequences and can go forward. And I hope it can in a positive way. I mean, we haven't really delved into the elections. I'm a little concerned about the personalities of who may be the president of Mexico and who is the president of the U.S. mixing well. But the reality is that, I think the reality of the tariffs and all that, I agree. I think most of it's fixable. I've heard that from both sides. The other thing is from a real estate standpoint, some of the most intractable issues are actually around agricultural goods, and that doesn't really impact what we're doing. So,
okay. Well, thank you very much.
If I may,
Yes.
just really quick, we have our ear on the ground with the data, and we're always looking out for companies leaving Mexico, manufacturing operations leaving Mexico. It's not occurring.
that's right.
Mexican, U.S. companies, European companies, Asian companies, they're not leaving Mexico. And what we have seen, though, is big operations that have stalled their plans to come into Mexico because there's uncertainty around what the outlook is going to look like, in terms of negotiation. But it's just stalling for the moment. No one's leaving, so I think that's all very good news.
That is very good data. And I'll mention something that's interesting. I mean, I'm from Tijuana, and Tijuana has a reputation of a fair amount of violence. But sometimes the perception is very different of what you actually see. I or many people in our office in Tijuana have not encountered really any significant issues, and I've lived there all my life. But just things to consider, and sometimes you can compare because there was a terrorist act in London and say, oh, it's unsafe to be in London, and it's kind of the new normal worldwide. There's a lot of information out there, so you have to take things a little bit with a grain of salt. Not to say that there isn't or that there aren't issues to be concerned about, but you have to put them really in context. Now we have like 2 minutes. So that gives me about 30 seconds for each one of you to give me your take on the upcoming elections. We had the debate yesterday, I think our second to last debate. And so give us your perspective on what's going to happen in the elections, and what do you see with a potential López Obrador juxtaposed to Donald Trump on the other side?
Of course,
30 seconds.
Yeah, López Obrador obviously is not the most business-friendly. Businesses in Mexico do not like him. If he wins, which is a strong possibility, even after last night's performance, which was funny, maybe ridiculous, but he might still win. But I've had this conversation with Lorenzo, and institutions in Mexico are very strong now. Institutions in Mexico are not what they used to be 20, 30 years ago. So even if we have a character like that in the executive power, that does not affect the other institutions, which are very strong and very independent. So he's not I'll say it openly, my candidate, but it wouldn't worry me on the progress of Mexico.
Lorenzo.
I would go a little bit with Sergio. I believe that whoever, and it was not our case because we do not invest in Mexico City, but real estate developers, maybe you did, I don't know, but that were, when he was mayor of Mexico City, they were able to do business as usual. Corruption was not reduced, I should say. So it's not that he's different or his team is different on that regard, which is one of the things he flags, but there was some of the changes favor investment into Reforma and into that are still having an impact today. But I really will reinforce the fact of the strong institutions that we have built, especially during the last 25 years. And that has helped us turn from parties to parties, from PRI to PAN to PRI again, and now the reserves are there. The currency, I should say, has been adjusting accordingly to things that are happening more in the world than in Mexico. Investment has not stopped. Companies have not left, and we have had our best quarters in the last in 20 years. The last 6 months has been a strong pipeline. 50% of our growth comes from existing clients that are deciding their investments. So I should say that it's not my preferred when. Again, there's still 43 days to go. Things may happen, especially polls are not exactly do not reflect what people do when they vote.
They don't really.
Just as it happened here. But
don't expect anything, right?
But you know, I believe that we're going to stay there. We're going to look for the long trend, and I said that's doable. Nothing to really be afraid of. On the contrary, opportunities which not everybody see can be taken by the people that are able to understand this.
So Steve, can I steal like 30 seconds from 30 more seconds just to hear David? And yes, okay, cool. So
from our perspective, either candidate can be as good or as bad as if they can be. Usually the power distributions and the main groups that support politics They're just interchanging themselves between parties and between leaders. So, in fact, we don't believe that whoever wins, even Andrés Manuel, will be as changing in the long term as they themselves. So maybe it's more of a short-term turbulence. We do anticipate maybe a 10% movements in the exchange rates and another 10% in, or maybe even less, 5% in the landing rates. And once the turbulence goes away, maybe further into 2019, we'll see the same kind of economic development that we've been having before, and not many changes, at least from a fundamental point of view. Some regulations may be changed, some superficial laws, but in general terms, it's just, we believe it's more of a way of expressing themselves than really fundamental and profound ideas being changed.
Mark.
And I'll just be brief. I don't live there, so I want to be respectful. The institutional issue that's been brought up is super important. So Mexico is not Venezuela, it's not Bolivia. If Mr. Obrador becomes the president and does not take a hard left turn, then I think it'll be absolutely fine. He did not govern as a hard leftist in Mexico City, so people are taking some hope from that. I hope that's appropriately based hope. But really, I also do believe there's going to be a lot of volatility, because I think the rhetoric's going to be a mess. He needs to, make certain points as a president if he's elected, and our president likes to make certain points as a president. So the rhetoric's going to be kind of spooky, but I think we can run. We intend to continue to invest unless we see a hard left turn.
Thank you very much, Steve. I think with that we conclude our panel. We're